What is going on, everybody? Welcome back to the channel, and today's video is going to be another installment in my beginner series, and I want to talk about the Fibonacci retracement tool. I'm going to briefly touch on what Fibonacci retracements are. I'm going to then talk about the actual tool on TradingView, my personal settings. I'm going to show you guys exactly where I pull my fibs from, and more importantly, how I use them to find really good entries. And I'm going to do that by showing you guys a live example of a real trade that I'm in right now, which is currently up about $2,000, almost $3,000. So without further ado, guys, get out your notebooks and get ready to take some notes because I'm about to drop the sauce on Fibonacci retracements. Let's get into it. So guys, here we are on the Bitcoin chart. And before we jump in, I just want to explain things a little bit. Fibonacci levels are just going to be levels of support and resistance. And when price comes down to these levels, this is where you want to look for entry triggers to just get into that trade and capitalize on the next move. Now, I like to use these in trending markets. So for me, when price is in a downtrend, I like to pull the fib to find the areas that are most likely to put in a lower high and continue that move to the downside. And contrary to that, if we're in an uptrend, I like to pull my fib to find a place where price is likely to put in a higher low to continue the trend to the upside, right? Because when you're in a downtrend, you have a high, a low, a lower high, lower low, lower high, lower low. The point of the Fibonacci retracement levels when used as resistance is to find these lower highs so you can find a good entry rather than entering a short at the bottom and then getting stopped out of your trade only to have the trend continue in your favor. You don't want to short the bottom. You want to wait for the retracement and enter in while price is coming up so you can capitalize on the next move down. And very similar to that, when you're in an uptrend, you do not want to buy the top. Rather, you're going to use your Fibonacci retracement to find support levels in this case for price to retrace down into, and then that is where you are going to be looking for your entry triggers. You don't want to buy up here. You want to wait for the retracement to get the much better entry to then capitalize on the rest of that uptrend. So in simple terms, Fibonacci levels are support and resistance levels that we have marked on our chart, and depending on the direction of the trend, we're looking at those as the highest likelihood areas for price to either put a lower high in and continue a downtrend or a higher low to continue the uptrend. And this will all make sense when we get to the actual candlestick chart. Now, before we jump into actual examples here, I do want to talk a little bit about my personal settings and the place that I find is the highest likelihood area to get those lower highs and higher lows. So if we come on over to the left side of TradingView, you want to come to the third tool here and click on that. Go ahead and select Fibonacci retracement. You're going to want to just select any point on your chart and you can see the retracement levels start to present themselves. You're just going to want to go ahead and pull over to the right to see these levels kind of expand. And these are the default levels, guys. You could see the 786, the 618, the 0.5, the 382, and the 236. You could totally use all these levels are usually respected in some form or fashion, but I do find that the settings I have in my experience do give me the highest hit rate. So let me give you guys my personal settings right now. So this is what my Fibonacci retracement looks like, guys. And you can see I'm really only using the 786, the 65, and the 618. Now the 618 and the 65 is what creates what we call the golden pocket. This is considered to be the strongest level. Now, in my experience, it does seem to be one of the strongest levels, but I like to combine it with the 786 to create somewhat of a zone because sometimes you won't just reject this golden pocket perfectly. A lot of times you will, but not all the time. Sometimes you will go up for that retracement to the 786. So I do like to look at this as an overall zone, whether I'm looking at it as support or resistance. So I'll actually just go ahead and show you my settings here. You could go ahead and screenshot this and just kind of copy what I have here, and your levels should look exactly like mine. So when I'm looking at the market and I see price cooling off and I think the downtrend is going to continue, if I'm looking for a short, I would pull from the high to the low. This is the zone where I would be looking at for a likely lower high in order to continue the trend to the downside. And on the flip side, if you see that the market may be looking to reverse here, oftentimes signaled by a break of structure or change of character, when you break a previous high, this could indicate a change of trend. But if I had a situation like this where I think that this uptrend is going to continue higher, I would go ahead and pull my fib from the low to the swing high, and I would expect price to potentially retrace into my fib zone. This is going to be the entry zone that I look at for entry triggers to get in and capitalize on the continuation of that trend. So if you're looking for longs, you want to pull from a swing low to a swing high so you can bring up those support levels. And if you're looking for shorts, you want to pull from the swing high to a swing low, pulling down those resistance levels. And you're going to wait for price to retrace into those to look for your entry trigger and then take the trade. And this also gives you a really nice risk to reward because if you entered a long position here, I like to enter on the golden pocket. And then again, I do look at this as a zone. So if we do wind up coming down to that 786, I will be looking at that as still an acceptable trade. And I won't look to exit the trade until we decisively lose that 786. And then if you're going to be targeting the previous highs, which would be natural if you're expecting the trend to continue up, right? You would expect to break this high. And if that is the case, I wouldn't be looking for the 786 to get lost, right? If we lose that 786, I would want to get out of the trade anyway because the idea of putting in that higher higher low, if we lose that 786, is no longer really valid, and I want to get out of the bad trade anyway. So it gives you a nice risk to reward, and again, you'll see how likely the reactions are in just a minute. So now that you guys have my custom settings and you know the levels that I like to look at, let's go ahead and pull up the actual chart and see how we can use these to find really, really good entries into your trades. First off, I'm going to show you a quick short example, and then for the long example, I'm going to show you the live trade that I'm in right now based off of this actual theory, and I'm going to show you the golden pocket I was looking at as well as the entry trigger I looked at to actually take the trade. So let's go ahead and say that we're looking at price here, and we see that we're starting to get a rejection, and we think that we are potentially going to get a continuation to the downside, as we do see that money flow here on the 30-minute is starting to come out. We also have the 15-minute money flow starting to come out as well. This is not the point of the video. Let's just say you have reason to expect that the downtrend will continue, but we do not want to enter in on the dump. We want to wait for a retracement to the upside to get a better entry point. When we start to see the correction to the upside come in here, again, we're expecting the downtrend to continue. We start to get a little bit of a bounce here. So I'm going to go ahead and pull my fib, again, looking for resistance levels for the downtrend continuation. We want to pull from the high all the way to the low here. You can see we have a golden pocket 786 retracement here, and I'm going to mark it out in purple as this is where I will be looking for the short. I would simply look for the entry on the golden pocket with the invalidation either above the 786, but sometimes you want to give your trade a little bit of breathing room here. You could even maybe put it above the previous high, but again, that's going to be based off your own risk tolerance. And then for me, generally, I would probably be targeting these lows because if I was going to anticipate this downtrend to kind of continue, this would be a decent place to look for some support and maybe take some money off the table. And I do recommend that you look for multiple take profits, but we'll have a separate video in the series for that. But at this point, we are not in a trade. We are simply sitting on our hands and waiting for price to potentially retrace into our entry zone. And we move price forward here, and you can see we have now come into our actual zone, triggering that entry. And you can see we did slip above that 786. That's why I say you do oftentimes want to give yourself some kind of breathing room up here because you can wick above the levels. But for the example, we know that if we're going to put a lower high in here and continue a downtrend, this 786 golden pocket is the highest likelihood area. So I would take that position here, and you can see we're targeting the lows here. And again, I wouldn't target the exact lows. I would always kind of give your TPs a little bit of breathing room in case you front run the level. And these examples can be found all over the chart, but you can see that entry did wind up being the point where we put in that lower high to continue a downtrend, and you wind up hitting that final TP for a nice little 1.8% scalp. And then if you just look at previous price action, guys, and you look at downtrends, like you'll just find that a lot of these lower highs do wind up coming in at golden pocket retracements. Like you can see here, we started retracing down. I can almost guarantee you that this is a golden pocket 786 retracement. There you go. Starts the bigger downtrend. Even on uptrends, you can see like even here, I would assume, right, from a high to a low, you just barely front run that golden pocket. So I highly recommend you guys go back and back test this. You'll see how likely it is to get those rejection at these levels. It's not going to work 100% of the time, but they are pretty dang reliable, as you can see in this example. So guys, now let's go ahead and jump on into the current example, the live trade that I am in right now. You guys can see I am filming this on September 19th, 2024, 2:19 p.m. So this is current price action here, and I am in a long currently, guys, from a golden pocket that we were bouncing off of back here at about $57,000 to $58,000. Now, the idea here for me was that, hey, I had reason to believe that this uptrend was going to continue. It was based off things like getting accepted into a volume profile that I was looking at, as well as money flow on the 4-hour on Market Cipher B. But again, this isn't about identifying the trend. It's just about getting in on those golden pockets. But I had reason to believe that if we got a pullback here, I would be able to look for a higher low to come in at this level to then get into the long trade here. And you guys can see here is that trade on Femex. We are still up $2,300. I already have about $959, almost $1,000 locked in. This trade was taken, I believe, on the 17th, so about 2 days ago, up about 3,000 here. But again, this was based off of a golden pocket entry, right? I had reasons to believe that this trend was going to continue up, and I'm going to show you exactly what I was looking at, not only the golden pocket, but also the actual entry trigger I used to take that trade, because trading Fibonacci's are two pieces, right? It's finding the key level, looking for the lower high or the higher low, but then you need that reason to actually enter the trade, because not all fib levels will get respected, and sometimes you'll just break right through them. So you need to be confident that you are indeed going to get that bounce. So this was based off many reasons, right? I had a bunch of reasons to enter the trade, but I was looking at this significant swing point here. It was not the swing point down here, and the reason for that is because we had already gotten a big move up here, and this was the lowest point that price hit before breaking these highs right here. So as we started retracing from that level, I pulled this golden pocket again from this significant swing point to this high because I was looking for support, giving me this entry zone. And again, not only did we come down and tap this level, now there was other confluent levels here. I won't talk about them because this is a Fibonacci video, but you can see I pulled from the significant swing high to the low. I get this golden golden pocket 786, which was also confluent with a bunch of other levels here, giving me high confidence in a potential higher low to come in for the continuation up. But the question is, what are we looking at to enter the trade in this zone? And the answer to that question is, guys, for this particular trade, I got the move to the downside, right? We retraced in here, and on the lower time frames, as we were tapping that golden pocket, I'm actually going to pull up Lux Algo here really quickly because it did mark out that entry trigger almost perfectly. But as we came down into that Fibonacci golden pocket, guys, we put a lower low in on our price action with a higher low here on our oscillator, which is a bullish divergence. And you can see that gold line on Lux Algo marking that divergence perfectly. And I did wind up taking the trade here. I didn't snipe the actual bottom, but I was able to get in at about $58,000 even. So like right about here was where I entered. But the thought process here was that bullish divergence was the entry trigger. I saw it coming in on the lower time frames, and because I was bullish for the continuation of the overall trend, because this Fibonacci retracement was pulled from the 4-hour, right? So the higher time frame, the stronger the level. So this is a 4-hour swing low to a 4-hour swing high. So this was a very strong level of support, high likelihood of the higher low coming in. I zoomed down to the lower time frames, found that local entry trigger, went ahead and I took that trade entry. Now I personally have my stop loss below the golden pocket. Technically, you could have put your stop loss below the 786, but I was targeting the previous highs here as I thought that would be the likely place for price to go if we were going to continue the uptrend. Go back to the 4-hour, and you can see that wound up actually playing out very, very, very well here, as we have now come up not only to our first target, but we have now also come up to our second and third targets here for even more profit, letting that winner run. Like I said, I did take some profit here. As you guys can see on that position, I do have that $950 realized, and then that almost $2,300 unrealized. So I did take a partial TP here, but letting the winner run, as my bias is that we could have continued a little bit higher here, but that is essentially how I was able to find that beautiful entry using the golden pockets, guys. I don't just bring this stuff up for no reason. I bring it up because I actually use this stuff, and it actually does wind up working. So as a quick recap, if you're looking for a higher low for a long position, you want to pull from a low to a high, wait for price action to come on into that level, and then look for your bullish entry trigger, which again, in this case, was a bullish divergence into the golden pocket, and then you look to go ahead and take those highs. And then on the contrary, if you're looking for a short, you want to pull from the high to a low, and you want to go ahead and wait for price to come down and retrace up into that resistance, and you could potentially look for a bearish divergence or any other entry trigger that you like to see for a potential break of structure to the downside, targeting lower prices. Keeping you from buying tops and selling bottoms, the Fibonacci retracement tool is an absolutely necessary tool, in my opinion, to have in your trading tool belt to help you find those profitable trades and make a bunch of money, whether price is going up or down. Hopefully this video wasn't too long, but I wanted to give you guys a beginner's overview of what I like to look for the Fibonacci retracements. So hopefully you found value in this. That's all the time I got for today's video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide.